is a word in our industry that is talked about ad nauseum. But you know why? It works.
The life of a business owner is not for everyone. It takes self motivation, persistence, and some comfort with the unknown to get a dream off the ground. And someone with that personality deserves financial planning guidance that works as hard as they do. That's what we're digging into today, what self made entrepreneurs need to know about growing wealth, protecting their livelihoods, and sustaining their growth into the future. Hello, and welcome to Money on Your Mind from Edelman Financial Engines. I'm Michael Liersch, a behavioral scientist, financial planner, and your chief planning officer at EFE. Thanks for joining us for a conversation about how people are feeling about money, what they're wrestling with, and how financial planning can help you straighten things out. Today, we're talking with Elliot Herman, an EFE financial planner. Elliot and I have actually known each other for quite some time now and have interacted quite a bit. He is an excellent planner, and we're good friends. Elliot, welcome to Money on Your Mind.
Thank you, Michael. Great to be here.
So, Elliot, I know a lot about you. I'm not going to give much of a preface. I know you have, two kids in their 20s, hanging out in New York City. You're an excellent professional, like I mentioned. But why don't you tell the audience a little bit about your background and ultimately why you got into the business of planning and helping clients?
Sure. Well, I grew up in central Pennsylvania, and I can proudly say that I survived 3 Mile Island. So if you see a little bit of a glow around my face, you'll know where that's coming from.
Okay.
I worked at the Reese's Peanut Butter Cup factory there, so I got a little chocolate in my veins as well.
I love Reese's.
Yes, who doesn't? My father was a food broker, started his business with my grandfather, so I got a first introduction into what it's like to have a business owner in the family, and that kind of sparked my interest. I went to college, actually started a small business while in college. So from there, I was recruited by Coopers and Lybrand, now PwC, to become a CPA and work with them. I had to go back to school at Northeastern, get a master's to do that. Worked with them for a number of years, learned the nuts and bolts of accounting, and from there pivoted to corporate finance, where I actually got to apply a number of those accounting skills that I learned at Coopers. I realized at that point that I really wanted to pivot in my career and work with small business owners. That's what I had started to do. I realized that's one of the things I like to do, and financial planning was really my calling. So I pivoted, joined what became my two partners, and we ran a successful business for about 25 years until we sold to Edelman a few years ago. While at my prior firm, we work with a number of individuals, successful entrepreneurs, those who had started out, those who had sold businesses. So I got a real taste for all the different issues that were important to them. And I would say for most of them, they realized that this was not a journey that they wanted to take themselves. They felt isolated oftentimes, and having a team of advisors behind them that had seen it, done it, and had lived experience was critical. And they just absolutely loved hearing that we could shorten the learning curve for them. That was music to their ears. So that's how I got into the business, and that's where I am today.
So we share a love of self-starters, people who, take that risk, are vulnerable, put their heart, mind, and soul into, a project, a business, and really build it from the ground up. So it's really extraordinary that you've dedicated your profession to helping those human beings, Elliot, and then you had your own journey around it. So one thing I want to hit on that you mentioned in, that journey, you use the word small business owners, and I'd love you to kind of unpack that for me a little bit. Then you use the word entrepreneurs before we hop into it, because in my mind, with all the business owners that I've ever worked with, that we work with at Edelman Financial Engines, I always like to take out the word small. But why don't you tell us your perspective on that? And I hope you get where I'm going with that.
Yeah, well, I think an entrepreneur is a business owner. A business owner is not necessarily an entrepreneur, and there's a mindset there. And when I say start out small, you're really thinking about the issues at hand as perhaps a one-person startup, and that can quickly morph into a much larger organization. And once you get there, the issues become a lot more complex. Typically, starting with, what kind of entity do I want to be, and those can be sole proprietorships, working into a partnership, S corp, C corp, LLC. What's the right thing for me? And those are some of the issues that we find that small business, we call them small business, but again, that's only because they're starting out. It doesn't necessarily imply that they are anything other than on track to great things.
So let's get into this idea of if I'm a business owner, I'm a sole proprietor, or I've grown into a business where I have partners, or it's larger. Uh, what are some of the planning considerations at a foundational level, at an essential level that you would highlight that are important to really consider?
So I think it begins with cash. Cash is king. Where am I going to get that cash, and how much am I going to need? And there's certainly never enough. A business owner once came to me and said, when things are going great, people are flocking to give me money. When they're not going so great, they suddenly disappear. So we need to plan for that, and we need to budget, we need to forecast. Difficult things to do, but we want to look at the best case, the worst case, and the most likely case. And those things, we typically get involved with the clients that we have in looking at the plans that they've put in place, their business plans, and ultimately try to figure out where's that cash going to come from. So I'd say that's a big piece of that early part of the journey. Secondly, we're getting questions around how am I going to grow this business if I want to hire people? What does that mean? How am I going to attract and retain those people? So we have conversations around different plans they can put in place, be it equity, be it retirement plans, or other things that will be attractive to those owners. So those are things that they're thinking about. How am I going to get off the ground? Once I do, what are the complexities that I'm going to be dealing with? So typically you're going to have a legal team involved, a tax team involved, a risk management team involved, and some other advisors involved to go through that with you. And quite frankly, those can be expensive. The legal fees, accounting fees. If we can cut some of the time out and speak with those clients about those issues, all those issues intersect. So we spend our time thinking about the intersection of those ideas with the client, flesh them out, and then they can go back, pay the fees, because ultimately they're going to be executed on by the attorneys and the CPAs.
Why don't you tell us a little bit about another trend that we're both seeing, Elliot, which is this idea of a lot of people, and to your point on cash and that evolution of the business, a lot of people take their own personal capital or their own personal money or even lending power and put it toward their business and almost commingle their own personal assets, their family assets with their business assets. Can you provide a perspective to our listeners on that idea, whether that's something that you'd suggest or suggest, evolving away from? What's your perspective there?
Yeah, that's a great point, Michael. It's very important for folks that are starting businesses to really make a separation between their business and personal assets. A number of reasons for that. One of the biggest ones, if you're going to be setting up any kind of corporation to provide asset protection and liability protection, what you're going to potentially face is a piercing of the corporate veil, meaning that someone who's seeking to provide or to instigate a lawsuit against you would look at how you're actually functioning, and that, if you're commingling your assets like that, would suggest that you're not really a business separated, but you're actually one and the same. That's one reason that you would want to make sure you separate. You want to have policies and procedures that are maintained just for the business, and those go a long way, maintaining systems that are in place. And I've seen this with clients who, they became so attached to the business and they're such a part of the business that they can't take any vacation. And God forbid they get disabled or they pass away and there's nothing left but, what they've really got in their heads. That could be a real problem. So that becomes a problem for the ongoing nature of the business, as well as when they go to sell the business. A buyer really wants to find someone, a business that they don't have to rely on the single or few people to maintain that business.
So let's dig a little bit into that concept because we get a lot of questions on business transition, the sale of a business, and when I say business transition, right, that can mean a lot of different things. It could be that sale, like you're talking about, Elliot, trying to find a buyer or positioning yourself for a buyer, an investor, maybe transitioning it to someone else, like a family member. Can you talk a little bit about those considerations as well?
Sure. You'd be amazed at how many businesses blow up because of an unintended event. So, as an example, buy-sell agreements become um, critical when establishing businesses because what they do is they set up for a situation where you perhaps have a partner, as you were describing, and that partner decides that they want to go a different direction, they want to leave, they want to buy out, or perhaps the partner is dies. What happens in that situation? So, you, to me, having some of those legal agreements up front prevents a lot of problems.
So another question that comes up a lot and then I'm going to get into a few questions on pitfalls and mistakes and trends and things like that. Taxes, Elliot, the big TAXES. Like what would you talk about when it comes to taxes for an audience of business owners, entrepreneurs? What would you say should be considerations that they should look at immediately?
Yeah, taxes are something that no one really likes to pay. That's just a fact. And the tax code has been put together to actually provide some opportunities for small businesses to take advantage of them in a legal way. Typically, businesses don't start out at a profit. Now, some do, but many don't. And booking losses, taking deductible expenses to create some of those losses that can be used in future years to offset gains is pretty important. So, getting good tax advice around that.
Which
I've
also
actually,
leans into your comment on separating your personal and professional balance sheets as well, right, Elliot?
yes, exactly. Uh, One of the things we talked about is family, hiring family if you can. I've got a client. He hired his two sons. So they worked in the business. The client was able to take a deduction for the amount that he paid to the children and fund Roth IRAs for each of them.
How would you really highlight the element of family dynamics, to your point, having family members either being adjacent or in the business and really controlling those dynamics to be more positive versus negative?
So families can be tricky. And what I would say, first of all, to get the deduction for these family members, they actually need to be doing something in the business. I think setting boundaries, uh, keeping people on task, and understanding that if you're not performing, that there's an exit door that you can walk out of. So, uh, it can be a great way to see if the children like the business. So a lot of times the owners would like their business to be succeeded by their family. But there needs to be agreement there, and there needs to be work ethic that keeps those children engaged and keeps the family engaged and on the same page. Because if not, that can lead to problems. And fortunately, I've not seen them, but there's plenty of TV shows that have illuminated what can happen when families do not get along in a business, and it could have dire consequences on the business. So I think paying attention to some of those softer issues that you're describing up front makes a lot of sense.
So tell us, we like to talk about pitfalls and things to do here. What are the biggest mistakes or pitfalls you see with this audience or writ large, Elliot, in your client interactions at this moment that you'd like to kind of highlight for our listeners?
Everyone's got a blind spot, and I think having an advisory team around you to help you identify those blind spots can be critical. I met with an entrepreneur who talked about one of the best things that he did was to set up an advisory board made up of professionals in his business as well as some of the professionals in the legal, tax, et cetera, area that are important to him. And they've been able to shorten the time to make decisions and really help look at things in a much larger way. And that has helped to prevent what again is the naturally having blind spots. So I think that's one of the areas that has been a success, is surrounding yourself with good people. Not waiting too long to take care of yourself. It's very easy to plow money back into the business, take money off the table, put it aside, make sure that rainy day fund is there, because someday, and it's raining out today, it could be that you need to draw upon that money. So I think recognizing that while the business needs cash, you also need to be thinking about those rainy days. So those are a couple of the things. I think another area to be thinking about is on that commercial and liability insurance space, that personal policies do not cover you. I don't think that's well known, and having a policy that covers the business can be very important. You don't want to find out that something's happened and your personal policy doesn't cover you, and I've seen that happen. On the plus side, having policies in place can make a big deal.
Elliot, it's interesting that you're highlighting this because, you and I have worked with, these amazing human beings who've, taken these risks. And you're right, as it evolves, I think the blind spots, and we all are a bit guilty of this, you kind of lose your way and forget to take care of yourself. To your point, take some of that risk off the table, ensure that, if something happens to you or your family, you or they are going to be okay. And I really love this idea of really evaluating that and taking incremental risk, or, that money, off the table or out of the business, and putting into one's personal balance sheet, so that you can accommodate the unexpected events. And also, when the time comes and you want to choose to maybe exit or leave the business, you can actually do it. So it's really sage advice. Let's move into an action everyone should be taking right now, either in the construct of business ownership or entrepreneurship, or just, all around. What do you think everyone should be doing right now, Elliot?
Well, I think that if you pay yourself first, take care of yourself first, start saving early, and diversify. Diversification is a word in our industry that is talked about ad nauseum, but you know why? It works.
It does.
This was a gentleman who came to me, and he was leaving his company to start up a company, and he had options at the other company, and I asked him to see his portfolio, and he had a portfolio of large growth stocks, large internet growth stocks. Perhaps we think about taking some money off the table, because guess what? If your venture doesn't work, we want something to fall back on. And that, unfortunately, did occur. The business did not succeed. And he had that to look to have and to support his livelihood. So I think that diversification makes a tremendous amount of sense, whether it's in your investment portfolio or in your business portfolio, because entrepreneurs they're betting on themselves, and certainly they have an eye towards how they want to succeed, and God bless them, hopefully they are going to succeed, but we know that doesn't always happen. So putting some aside and not betting on just one stock, that would be imprudent for us to do. It's imprudent for the entrepreneur to do. So I think those are some of the things that we think about.
So Elliot, I just want to say thank you so much for sharing your wisdom, your thoughts, your experiences, and your clear passion for serving your clients with us today. Thank you for joining.
My pleasure. Great to be here, and I wish all those entrepreneurs out there the best of success.
So that's everything we have for today. This has been Money on Your Mind. A big thanks to financial planner Elliot Herman for joining me, and we'll be back next Wednesday with a new episode. Subscribe to the show on Spotify, Apple Podcasts, or YouTube so you don't miss it. And hey, if you leave us a rating too, we'd appreciate it. I'm Michael Liersch from Edelman Financial Engines. Talk to you next time.